SN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And we're back on the Financial Survival Network. You're listening to Kerry Lutz, and gold and silver. Can't stop talking about the two precious metals. But with us now is Ned Schmidt, publisher of the Value View Gold Report and the Agri-Food Value View newsletter. Ned, welcome back.
Hi, how are you doing this morning?
All right. So gold, it looks like that 1,300 has become the base for it. And it looks like silver doesn't want to really go below $20 either, huh?
Yeah, the bear market has been broken on these two metals for some time. And right now, you've got blue sky just above it. If you look at the charts, there's nothing but blue sky. And one of the mistakes you got to be careful with today is using charts too long, where you're looking for a bear argument. The bear markets in these stocks, gold and silver have been over for some time. Silver's ended at June of last year. Gold ended in December. So on a technical perspective, you've got silver, which I think could be the bell ringer. $22 on silver takes out the last short-term high, but it also puts it up 20% from the December low. And the journalists will start writing articles claiming a bull market. And I really do not believe that much of the investment community, is aware that silver's up as much as it's up, and it's been outperforming their beloved stock. Mm-hmm. So silver could be the bell ringer. The fundamentals on silver have been improving. We have two sources of demand for metals. One is physical, two is virtual. And if you look at the commodity futures, the large speculators, the funds, had got down to almost zero position. And that's their longs almost equal to the shorts. And in the last month, they've gone to plus 50,000 contracts long. I don't think that's a genie going back in the bottle. They will follow price momentum, and the price momentum is improved on gold and silver, and that will draw them back. You can talk all the arguments you want about the U.S. economy and the dollar, blah, 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 blah. But when it comes right down to it, virtual demand follows price momentum. And we're seeing it, the same thing in gold, but it hasn't been as dramatic as in silver. So the magic number on silver technically looks like $22. On gold, it's $13.85 and about $14.20. $13.85 is the last short-term high. $14.20 puts us up 20% from the December low. So on the technical side, you got nothing but blue sky. And then you've got the underpinning on the fundamental side, which is just positive. With what's going on in the world, the Middle East is in the worst situation it's been since 1945 or 47, whenever they started fighting after the war.
49, I think, but yeah.
49, yeah. And Putin, our president shook his ballpoint pen at him again yesterday. They're just laughing at him. And so
pathetic.
the only place that's bearish on gold and silver is in the United States. And India has opened back up their imports. Mm-hmm. China, people are still looking at the Hong Kong export numbers as a gauge of Chinese demand. And you can't do that anymore because the gold is now being imported right into the Shanghai free trade zone.
Right.
So in first quarter, Chinese demand doubled from a year ago, if you use those numbers. The other thing is that there's this attitude, and I was reading an article this morning, how with the Fed tapering, the dollar is just going to explode upward in value. There's going to be a shortage of dollars. But that's nonsense. There's no shortage of dollars in the world. We're all awash in them.
Yeah.
But there's a very subtle change going on in the use of the dollar, which hasn't yet really impacted it. But as it expands, it will. And that's with trade with China. In years past, if you bought and sold something to China, like Ford Motor does, you had to, when you received yuan for the sale, you had to convert it into dollars because you couldn't hold the yuan. Then when you bought parts from China, you had to take those dollars and convert them back into yuan to buy the parts. Well, that created a demand for dollars, and it was expensive. All it did was feed the currency brokers. So now, Chinese have changed the rules the last couple of years, and 5 years ago, 1% of Chinese trade was cleared in yuan. Today, 18% is. And so people are gradually around the world shifting from any need for the dollar to using yuan. Ford Motor Company doesn't do that conversion anymore. They don't hold yuan. China and Russia have signed an agreement. All of their trade is going to settle in yuan. There'll be no more dollars needed. And so that's going to lower the demand for the dollar. So the street has been waiting for a rally in the dollar for almost a year, and it hasn't come. That's because at the fundamental level, there's less and less demand for dollars in the world. And I don't imagine either that anybody in the Middle East is buying anything but gold and silver. I don't know. What do you think?
Yeah, I would say with two hands, if they can get it, though. The question is, on a physical level, how much gold is really available? From what I've heard, physical constraints on the market daily, there's just not really that much available.
Well, it should be. I mean, this downward movement in price and because the companies to rationalize their activities. And so, it's the classic thing that happens when in a commodity, when prices come down, you start putting some constraints on supply. And I haven't seen any numbers on recycling. Have you heard any lately?
No, but it's way down from what I've heard. I heard the scrap market, way down.
Is almost non-existent.
Yeah, cash for gold.
And the other thing is the markets often give us the right answer. And the GDX, which is the ETF of the bigger miners, is up over 20% thus far this year. I mean, the stocks are telling us that. And one of the things to watch is these stocks making new highs. Is he drinking? Gold stocks making new highs?
Yeah.
Yeah. In the last month, of the dozen that I follow, AEM hit a new high. Gold, GOLD, hit a new high. And AU is just waiting for a chance to do it.
Mm-hmm.
I mean, it starts to get hard to argue. I mean, even Goldman Sachs might have to change their mind. When all the markets are saying you're wrong, sometimes you've got to change your forecast.
Yeah, I know what you're saying, and it's becoming more and more obvious. But watching the day-to-day numbers, people tend to get a little discouraged watching them.
Oh yeah, and if you need a little boost. I don't know if you've read this book yet. It's called Twilight of Abundance. Why Life in the 21st Century Will Be Nasty, Brutish, and Sharp by David Archibald. Now, you and I have both read all the end-of-the-world books we ever need to read.
Uh-huh.
But this isn't really an end-of-the-world book. So this guy lives in Perth, Australia, and his true forte is in energy. But he also teaches of I've forgotten the name this morning, Institute of Policy Strategy or Public Strategy or something. It's a mega think tank that you don't hear about. Mm-hmm. It's actually a graduate school in Washington, D.C., where people from the Naval War College go, the Army War College, CIA, blah, blah, blah. That's where these people go and get a master's degree, courses for the master's degree.
Right.
In this book, the first book, sorry.
Yeah.
This is the first thing I have read that actually scared me about nuclear war in the Middle East. If you get through the first set of chapters, and don't believe we got a problem in the Middle East with nuclear weapons, you're just oblivious to what's going on. So, and he takes a good look at oil. You know, it was 2008 was when oil peaked. It was in 6 years. And he goes through a discussion of the old-fashioned oil and shale oil and gas. And with the decline curves on shale oil and gas, he's looking for another oil problem to start developing in the next couple of years. So I don't do oil, but it may be time for some of your listeners to go back and take a look at oil, because it's been a while since it's been of interest.
Yeah.
So, again, the name of that book is Twilight of Abundance by David Archibald, and I read it on Kindle, so it's fairly cheap.
Mm-hmm. We got it.
But I'm genetically wired to cheap, so.
Mm-hmm. Yep.
Some of us are born that way.
All right. Hey, when we return, we need to talk about what's doing in the agricultural commodities on the Financial Survival Network.
FSN Radio. It's all about what's next.
Urgent alert. Ex-Secret Service agent claims it's worse than people know. One of Obama's former Secret Service agents recently smelled a rat. What he discovered inside our government was so devastating, he only saw one option. He quit. What's worse, he fears what he found could affect your job, your neighborhood, and most importantly, your family, very soon. It's worse than people know, he said in a recent interview, and I'm not trying to scare you either. We too share his concerns. This is why we've devoted the better part of 3 years collecting solutions for nearly all problems created by intrusive governments, and we've succeeded. Go to hiddensecrets1.info to check out all the details. Our panel of insiders have devised a legal but sneaky set of solutions to help you reclaim your privacy from the NSA, opt out of Obamacare, and make a bundle from little-known investments and small business opportunities. Simply visit hiddensecrets1.info. That's hiddensecrets1.info.
FSN Radio. It's all about what's next.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
The Financial Survival Network. It's all about what's next.
We're back with Ned Schmidt. You know him well from his 2 newsletters dealing with gold and agricultural commodities. So, Ned, what's going on here with corn, especially? You said it's behaving in an interesting way.
Yeah, let's put it in perspective. Of the 16 agricultural commodities I follow, 11 of them have positive price momentum. The meats are very strong. Butter is in short supply. Butter's $2.40 a pound wholesale now, and it could easily be $2.73 by the time the holidays hit this year.
Mm-hmm.
So most of the agriculture sector has positive price momentum. Corn has been a problem because for 2 reasons. The first being corn is a headliner grabber. The street thinks it understands corn, even though they don't.
Like so many other things, right?
Yeah, right. So what we've got is 2 things going on. We've got a big crop coming, it looks like, again this year in the U.S. But we've got this tendency in markets the last few years where the funds push everything to an extreme. You know, things get too high a price. I mean, corn shouldn't have ever been $8 a year and a half ago, and it shouldn't be $3.50 or $3.75 to $3.50 right now. So the funds have piled into corn, and what you've got is a corn price is you've got a spring that's been compressed by these trading funds. On the ground, we have a serious problem with rail transportation, and this has been going on for 6 or 7 months. The argument in January, February was that it was the winter, Okay, winter's not here anymore. This is July. In North Dakota alone, the railroads have failed to deliver 5,000 grain cars for more than 30 days. You cannot get grain out of the upper Midwest because of poor rail service.
Really?
And as I told somebody recently, Warren Buffett needs to spend a lot less time on immigration and a lot more time finding somebody to run his railroad. Because between Burlington Northern and Canadian Pacific in Canada, you can't deliver grain. Cargill has said that some of the export elevators have shut down, as well as processors, because the railroads are run so bad.
That's crazy.
And so if you can't get grain out of your elevator to the West Coast, are you going to buy more? No. So that's compressed the price. So we got a price for corn right now about $3.75. The problem is this: 1/3 of U.S. corn farmers have a break-even price of $4.50 or higher.
Mm-hmm.
They could not plant. If they planted corn today, they would lose at least 75 cents a bushel, and that's a cash loss, not this phony non-GAAP accounting they use in Silicon Valley.
Right.
What's going to happen is we are going to see in March 30th, 1st, or whatever day that is of the month, when the report comes out, the biggest drop in corn acreage in the United States we've ever seen. It's not going to be planted.
Really?
We'll get the first hint this fall. Remember, Argentina and Brazil are on the other end of the world from us.
Mm-hmm.
So they will be planting in October and November. And if we're getting $3.75, the farmer in Brazil, because of their bad transportation system, is probably getting $3 for his or her corn.
Right.
So that'll be the first hint of the problem we got for corn. We could see corn, combination of the fundamentals due to price and this pile-on effect that traders do. We could see corn this time next year at $6.50 to $7.
Really?
Yeah, and we won't need that. That's gonna. The meat situation should start improving into the first quarter, but it's going to get hit again next year with a high feed price, and so corn is kind of a sleeper right now. And I wouldn't be, like I said, I would not be surprised to see corn at $6.50 to $7 this time next year.
So what's the best way to play corn? $6.50, $7 corn in a year. If you're an educated, sane speculator, Ned.
Well, let's start with what this means to people, the farmers and the people who do business. It probably will hurt Monsanto, Syngenta's business in the spring. It's going to defer some purchases of farm equipment. The recovery for AGCO and Deere won't come till late fall of next year. So the fundamentals argue that the stocks will be flattish to weak as they have been. The reality is, once corn starts hitting the headlines, remember the street doesn't often pay much attention to fundamentals. But by this time next year, with corn prices higher, we're going to see the people moving back into these stocks. And so I don't see them being hurt much by it, because each of them have individual situations. In other words, it's going to be, what is the company doing, not what is the ag market doing, until corn starts rising. So if you look out, if you're an investor looking out a year ahead, not the next 90 days, you look at AGCO, you look at BG, which is a grain mover around the world. We still need to move grains. We're at the point right now where China and most of the developing world, any increase in demand for food has to be met by imports. There's just no way around it. And so BG, JBS, the big Brazilian meat company, it's the largest animal protein company in the world. and it gets 75% of its revenues through the United States. It owns Pilgrim's Pride and Swift. The trades in the United States is JBSAY. And as you and I have talked before, this animal health group has, for some reason, there's been some rotation out of the stocks. So they're look a little better, and that's Zoetis, BTS, and Vibro Animal Health, which is TAHC. And there'll be a third one coming this fall sometime. FMC Corp is splitting between FMC Animal Health and FMC Minerals. And I suspect that there are probably some of your listeners that might have an interest in FMC Minerals as a pure investment because they do lithium.
Right.
So, and again, as we talked before, this industry didn't exist a year ago in terms of public companies. So we've got two now, we'll get a third. The street likes drug companies.
Sure.
And always overpays for them. And Zoetis pays a dividend. It's in the S&P 500. So these are not, none of these three companies are new companies. I mean, they've been in business for years. But they're new as publicly traded companies. And so the market underowns them. So those are some places to look.
Sure. Makes sense. Well, obviously, interesting times ahead, Ned. So just tell us again, got to wrap up your newsletters, how we subscribe to them.
Yeah, my gold letter can be found at valueviewgoldreport.com. And I think I just sent out a July letter, which I think sums up this pretty good. So any listener that drops me an email, I'll send them a copy of that. And agriculture is at agrifoodvalueview.com.
All right. Hey, just give us your email address so we can send you an email and get that July gold report.
On those websites, there's some our contact forms.
Okay, so just go there, and you'll find the link anyway on financialsurvivalnetwork.com. Don't forget to subscribe to our newsletter. Ned, always a pleasure. We'll talk to you again soon.
All right, it's always fun to visit.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.